Hello, welcome to the Bluff Books podcast. This is #BluffBooks, the show that's all about building, leading, and understanding financial freedom. So whether you're an average Joe seeking financial well-being and independence, or a fiduciary advisor who seeks to connect with average Joe, thank you for joining me on this show as we discuss books relating to the topic of financial literacy. And don't forget to hit the subscribe button so you can continue to enjoy a new episode with me every week. I'm your host, Ian Gates, a former Spanish teacher and U.S. Army intelligence officer, but now I'm an aspiring financial advisor because as a teacher and an intel officer, my soldiers and my students constantly had financial questions, and when they'd ask me, I'd have to say, I don't know, I have to look that up too. And so the show's name comes from the military acronym BLUF, which stands for Bottom Line Up Front. It means that here I seek to always present the most important information right at the start in the clearest, most engaging way possible. Like my hero LeVar Burton of Reading Rainbow fame, my goal is to encourage a love of reading, and for this show to be a springboard, not a stopping point for your engagement with these texts. And please remember, this is a radio show, so we can only discuss concepts in terms of general truths and tendencies. It is for educational purposes only and is not financial advice. Thank you, and let's start the show. Hello, and welcome to the 5th episode of the Bluff Books podcast. I'm Ian Gates, and my guest today is Kristine Stevenson, Enrolled Agent.
Thanks for having me.
Yeah, so we met at FinCon 2023 in New Orleans, and I had the pleasure of attending her seminar talking about how to stay out of trouble with the IRS, and she had a book, and I just finished it, and it's been really enlightening seeing all these potential pitfalls, especially because I am going on my own entrepreneurial journey. And I'm sure that many of my clients will be in the future.
Yes, that's the target audience, that small business, the self-employed person starting their business as an entrepreneur, sole proprietor, independent contractor, all the different words that we use. They were my target in this book, for sure.
I really appreciate the wit and humor brought into the presentation and also the checklist at the end of each chapter, because there's a great book out there called The Checklist Manifesto, and it makes the point that surgeons rely on checklists, pilots rely on checklists, so why don't you?
Yeah, no, good question. And I appreciate that I like checklists. They help us, even if we don't get everything checked off, there's the list that stays there as a reminder.
Definitely. And even if you can't check something off, you've at least paid attention to that little factor. Reminds me of an anecdote about a factory that tested windshields, and they would shoot small chickens, the ones you get from the supermarket, out of an air cannon just to see if it could hold up to bird strikes. And eventually the windshield shattered, and they found out that somebody had forgotten to thaw the turkey.
Oh no. Well, at least they were already dead to begin with. They weren't shooting live fowl out of the cannon.
Yeah, I think you call that foul play.
Ooh, ching, ching. Nice one.
Hey, dad jokes. I've got a 4 and a 2-year-old, so
There you go, right?
I have my license to terrible puns.
Absolutely.
All right, so first big idea I got out of the book was don't spend Uncle Sam's money, and how important that is in not only personal finance, but also in your business finance. And on a couple occasions, Uncle Sam overpaid me, once by $30,000, long story. But the best advice I got was don't touch it. Don't touch it. You don't know when they'll claw it back.
Mm-hmm. I was going to say, wow, there's probably a good story behind that. Yeah, let it sit there. Don't touch it.
Yeah, and how with being self-employed, you're not just paying about 7.5%, but you're actually paying more than that.
Right. You are paying all of it, 15.3% potentially, when you're self-employed. When you are an employee, you pay half and your employer pays the other half. So a lot of times people don't realize as an employee, one of the benefits is the employer is paying half of the tax that's due. You pay half and they pay half. But when you're self-employed, it's all on you.
Definitely. Part of setting up a business is following the Ghostbusters rule of don't cross the streams, not commingling funds, because you really need to set up designated accounts. I became a landlord not long ago, and advice given to me was put that security deposit in a separate account and use that account for absolutely nothing else.
Yes. In theory, that security deposit is your renters, assuming they leave everything pristine clean when they check out. So you give them your money back. But if they leave the carpets dirty, you have to have some money to pay to get the carpets clean. But yes, keeping your accounts separate. And this is one of the things I talked about at the conference is the importance of setting up accounts to receive the income from whatever source. And then having designated, I like to use what Mike Michalowicz talks about, the profit first system. I use a modified version of that. And having other accounts, once the income comes in, designate some for taxes. You designate some to pay yourself. Designate some for business expenses and things that you're going to need to buy for your business and whatnot. And then some profit as well. Profit or purpose. Just kind of some money that you actually have at the end of the quarter or the end of the year that's real profit. Get to go on vacation or pay down debt with it or buy something or whatever it is you're going to do. So avoiding commingling, as you were saying, is super important. And just opening those business accounts, even if it's just one business account, helps you avoid that. That is one of the biggest errors I see newly formed businesses make. Personal and business are mingling inside the personal account.
Yeah, for business, the all-important rule is don't lose your paper trail because there's no such thing as being off the books. And just like you can't unscramble an egg, at least without getting into some Breaking Bad level chemistry, you really don't want to be in a position of trying to figure out whether that toilet paper purchase was for your store or your house.
Exactly.
Especially if it's 8 months later.
You're not going to remember. Was this for the house or was this for the business? There's no way you're going to remember. So good accounting systems, even basic systems and processes. I talk about that a lot. The importance of having those in place, not just for yourself now, but for when it comes time to prepare the tax return, whether you're doing it or you hire a CPA or an EA or you use, like TurboTax or TaxHawk, great company, wonderful software. If you have kept it somewhat in order and separate, it's a lot easier for you to go back and say, oh, this toilet paper was for the business, not for the house, because it came out of the business account, tracked it.
Definitely. And there's always the challenge of being so wrapped up in working in the business that you don't take time to work on the business. I was talking to someone recently about their firm and it occurred to me that they were so busy bailing the boat that they didn't have time to patch the hole.
Yeah.
And you really want to set up that architecture from the get-go, and you don't want to have any sort of mixed signals with the IRS because bureaucracies are allergic to nuance.
Yes, and bureaucracies also move very slowly should a problem arise. Yes, I want to comment, if I can, on your comment about you work in your business, you work on your business, and the discipline and the importance, the earlier you start this, the better, to create space, to create time literally on your calendar to work on the business. It's super important. Maybe it's a small amount in the beginning, half a day, 1 day out of the week, or 1 full day out of the month to work on the administrative things of your business. And what's the money doing in my business? And if you have employees, is everything aligned with your employees? Just taking that time to work on the business is critical because it's so easy to get sucked into busy, being productive when you're working in the business. Michael Gerber wrote about this to some extent in the E-Myth. Such a great book. If you haven't read it, I would recommend the E-Myth, Michael Gerber. Your business serves you. You do not serve your business. And when you create time for yourself to work on your business, you are helping yourself. You are helping your business to serve you.
Indeed. Ramit Sethi in I Will Teach You to Be Rich, another personal finance book, he talks an awful lot about creating systems because if you set up systems in your personal finance, so you never get used to having extra money to spend, that raise goes automatically to investing, you have a certain amount of your money automatically going into designated accounts for this, that, and the other thing, it takes the willpower out of the equation and it takes the pressure off for consistently putting money where it belongs. And so if you have, say, 5% of your paycheck going into your eating out fund and you have a debit card associated with that, well, the account is at zero and there's 5 days left in the month. So I guess we're not going out for drinks.
We're eating at home. That's right. Yeah, I love that. I never thought of it, how that was phrased. When you have these things, systems, processes in place, and money is automatically Like that's all the money goes into your primary account that you pay your bills on and spend stuff on, and you automatically move some out. It removes the willpower that you have to, that discipline of doing it yourself. If it's automatic, it just happens. Willpower is good and important, but it's not everything, especially with money.
Yeah, I remember seeing a television show where a guy invents a device to force him to work out at night. So he wakes up every morning with amazing abs that he put no work into until his subconscious dream self starts sabotaging him for revenge for making him do crunches all night.
Yeah, it's willpower and discipline serve you to a certain point. And money, in particular, money is emotional at a very deep level. Oftentimes you're not even aware of it till something happens, and then you're in the thing and your brain shifts and emotion takes over and willpower just kind of goes by the wayside.
I have to say, I love your case for not saying no to DIYers, but really encouraging DIYers to think about what is your time worth in terms of hours. You have this great analogy about changing your own oil. And my father taught me to change my own oil, but I haven't done so in over a decade because by the time I've gone to all the chores of changing the oil, I've blown half a day as opposed to just driving up to Jiffy and doing something else on my computer while they do their part.
Yes, there are many people, and I see this all the time. So I'm self-employed primarily, but I have a side hustle that's a job. So I'm an employee for a company, Tax Hawk, and I get to chat with people during the tax season. I work all year round, and particularly during tax season. I've also worked for TurboTax. I work for H&R Block. I'm familiar with all the softwares. And the do-it-yourselfers, I'm a do-it-yourselfer myself, so I can appreciate that mindset. But they will come in and they will spend so much time trying to figure out the thing that, they're trying to save some money on or manipulate the software, or they don't understand the rule. I talk about this in the book. They don't understand the rule behind the question being asked, tax rule. And so they answer the question one way because it seems like it's the right thing. But they miss the rule, and because they've missed the rule, then they miss the benefit that's really embedded inside the question, and so they miss that, and they don't know it. You don't know what you don't know, for sure, and that's true with anything in life. And the DIYer, part of it's your time for money, and it's your level of knowledge, and do you really understand what's being asked behind the question, software prompting?
Definitely. It's the difference in the Dunning-Kruger effect of there's conscious incompetence, then there is unconscious incompetence, and there's usually this little peak of feeling great about yourself when you're like a yellow belt, to use a karate metaphor, and then you get smacked around a bit and get really down on yourself as a green, blue, brown belt, and then you start climbing up towards being a black belt where you're conscious that you really are competent, that you really do have a level up on average Joe. But it's that dangerous phase of, look at me in my white belt, I'm going to beat Jackie Chan.
Act as if you're already there. That's a great place to be in some respects. Maybe not with, your white belt and Jackie Chan, or maybe not with the IRS. Like, I know what I'm doing here with my taxes.
Especially if you're running a business. So you mentioned physical inventory and cost of goods sold. Now, COGS gets really in the weeds and complicated. Mm-hmm. And then, of course, if you have an employee, because now it's on just you, but you're bringing your employees' rights and obligations into the mix.
Yes, I had a call earlier today with a young lady. She's a hairstylist and she makes good money, and she's bringing someone on board to help her. And so we were walking through some of the tax-related issues with employee and payroll and paying the state unemployment tax into that fund and the different things that come with having an employee versus hiring someone as an independent contractor. Independent contractor, boom, you write them a check, they're done. They take care of all the taxes and all that. If they're your employee, then you're adding a lot of additional responsibilities. And if you don't know what you're doing, it's very easy to accidentally get into trouble unless you have someone that's already helping you with tax preparation, CPA, enrolled agent, maybe even a tax attorney. I like to recommend people, if you're bringing employees on and you're a small business, consider using one of the many, many wonderful payroll companies out there. Gusto, Paychecks, If you want to do it yourself, there's Patriot Software. That company will also help you with payroll. There's so many good ones out there, and they're relatively inexpensive. $50 a month for someone to take care of your payroll. That's nothing.
Absolutely. And it's the question of, do you really want to make homemade sushi? And do you
Right.
really want to feed it to your friends?
That's right.
And another part of that, too, is whether you have a W-2 or a 1099, employee independent contractor, if you're paying them more than $600, or I think you said in some cases over $400, you really, really owe them a paper trail, both for your sake and theirs. And so many people think there's no paper trail. That means that the IRS will never know. But all it takes is one loose thread for the IRS to start pulling on, and you'll have auditors coming.
Yes, I saw this hundreds of times in my time at the IRS. So I spent 7 years there, about 7 years at the IRS in Austin. And I even made a little scenario about this. I wrote in my book, like me on the phone talking with the taxpayer. And so here's the two numbers. If you're self-employed, if you make $400 or more, now you have a reporting requirement on the tax return. It doesn't mean you'll necessarily pay tax, but you have a reporting requirement. That's the $400 number. The $600 number comes into play if you hire someone to make widgets or whatever, and you pay them $600 or more, you have a requirement to give them a Form 1099 NEC for non-employee compensation, or what was more commonly called the 1099 MISC miscellaneous form. That's being phased out. But if $600 or more, that's the magic number, you need to send them the form. Now, if you are the person that got paid the money, the $600 or more, and you don't get the form that you're supposed to get, you still have an obligation, a reporting requirement to report that income. Because if you don't, you can be darn sure the person that paid you $600 or more, they're reporting it on their tax return. It's a deduction for them. They want to take all the deductions they can for their business. So if they report it and the IRS doesn't see you reporting it on your tax return as income, that's when the you-know-what hits the fan.
Yes, just like Santa is making a list and checking it twice, the IRS is keeping a close eye on all of the filings coming through, but just like every kid at Christmas is wondering, did Santa get my Christmas list? Did he get my letter? We grown-ups really should be asking that question too and be similarly anxious about it rather than just fire and forget.
Yes. The IRS, they have various ways of pulling tax returns and looking at them. Some are automated systems. It's an automated thing. There's no human being is initially looking at it. One of the departments I worked at the IRS, it's called Automated Underreporters. Somewhere back in Martinsburg, West Virginia, there's a big old system, and it's gathering information that was reported to the IRS by businesses, and it's gathering information that was reported to the employees and people filing their tax returns. And it's automating a system. It's matching it up. And if there's a discrepancy or a mismatch, then it goes to this department that is staffed by people. I was one of those people. And now a human being is putting eyes on your tax return, like literally your copy of your tax return if you paper filed, or the electronic version if you sent it electronically. And we're cross-matching and we're looking for these mismatches of income. Oh, the IRS, this business reported you made $800, but you didn't report this $800 on your tax return. Now we think you owe more tax. And so we send a letter out. I say we like I still work there. They send a letter out.
Yes. As you mentioned in the book, it's not like IRS employees ever go home at night or get a cold or have a fight with their partner or have a hard time reading grandma's palsied handwriting.
Right. Yeah. I mean, they're just like you and I, just like all of your listeners. It's the end of their shift. If it's coming down to, do I really want to spend the time to read through this person's response that they wrote to the letter? Or do I just want to clickety-clack a couple of buttons on my computer and resend the next series of letters versus taking the time to actually fix it? Because I'm tired. It's Friday night. I've been feeling cruddy all day. I want to go home. What are most people going to do? They're going to click on the computer and send the next volley of letters versus maybe taking the time to really dive in and look at your answer and figure out what was going on. They're regular people. Make it easy for the person on the other end at the IRS to figure out your stuff. Make it easy for them.
Yeah, if you make people in a bureaucracy work harder than they need to, they tend not to like you very much. And I can say that as somebody who has pushed paper through a bureaucracy and has had paper pushed to him in a bureaucracy. And yeah, we all know what goes to the bottom of the stack.
Mm-hmm.
I was like, oh, that's complicated. I'm gonna deal with that later.
Deal with that later. Let's see what's the next one. Oh, yeah.
Yep. And for people who don't even file their taxes, my goodness, I'm amazed that these people will attempt it. But thankfully, the IRS is not looking so much to get you. Thankfully, there's a little bit of grace for people at least trying to do the right thing.
Yes, better to file. I say this on my radio show that I'm on sometimes. The host and I will talk about this. Better to file your return on time and it's wrong, incorrect, and you have to fix it later somehow, or let the IRS fix it for you, but you filed. And so you've met the filing portion of doing the thing you're supposed to do. Even if the return is wrong, just file it. That's a big thing. So many people don't file once, 1 year, and then a second year goes by and they don't file, and then a third year. I've seen their history. The work I do a deep dive into people's accounts when they hire me to fix their tax problems. And I'll go back 20 years and I'll see their filing history for 20 years. And the worst one I've seen is no tax returns were filed 2022 all the way back to 2020, with the exception of one return filed in 2013. All the others were not filed. And this guy's in business. Like, how is this possible? How is the IRS not caught up with you? And when that's the case, we have to carefully ease people back into getting back into the system. It's astounding. So there's that I've seen. And then when the IRS files a return on your behalf, that's rarely in your favor when the IRS files a tax return. So again, file a return. And if it's wrong, okay, you can go back and correct it, but at least you filed your return.
Amen to that.
It's pretty shocking. And I will say this, people that don't file continuously for many years, sometimes it's a cycle of fear that is so overwhelming and they don't know what to do. And so they do nothing, which is not the right thing to do. But it's a process to get back in if you've been out of the system for a while.
Yeah, unfortunately, it is a feature of human nature that people tend not to change their behavior until they hit rock bottom. And sometimes they get a shovel and keep on digging.
For sure. Yeah, and I was just writing about that earlier today. A reporter sought me out for some commentary on, what the IRS does when you have back taxes. So I was writing an article to send to her, writing some notes to send to her. And that was one of the things is until we're forced to deal with it, the rock bottom, we have a tendency to stick our head in the sand and, maybe it'll go away. But it doesn't. Rarely does the IRS go away.
Well, what are the two things you can't avoid?
Death and taxes.
Yep. But thankfully, there are wonderful enrolled agents like you and certified financial planners and lots of ethical, accountable professionals who are there for people to get the answers they need to their very unique problems. And of course, on this show, we're only talking in generalities, but books like yours and hopefully podcasts like this one are great for just opening people up to the possibilities that are even out there.
Awareness is curative.
Absolutely. And again, thank you so much for being a guest on the show, and I look forward to seeing your future titles.
Thank you, Ian. I appreciate it. Thanks for having me.
Take care.
Thank you for listening to today's episode of the Bluff Books podcast. We look forward to you joining us again as we continue to explore the world of finance, investing, and wealth building by reading new and classic books pertaining to financial literacy. And please remember, this is a radio show, so it's for educational purposes only and is not financial advice. But if you need financial advice that is relevant to your unique personal situation, please consider hiring a certified financial planner who works on a fee-only basis. The big ideas I cite here from the books are based on my interpretation of the text, and I look forward to hearing from you and engaging with you on your thoughts and recommendations. You can best reach me by joining the #BluffBooks group on LinkedIn or emailing me at ian.gates12@outlook.com. And remember, here at #BluffBooks, we cite sources, keep it brief, treat others with respect, use humor, promote freedom, and of course, don't bury the lead. Take care, guys.